All right, doing a little back-to-back action here, and excited to be talking about tokenizing private markets, which is something that just seems to be accelerating like crazy lately, especially ever since we got some significant regulatory clarity in recent months. So I'm super excited to be joined by Goutham Buchi of AngelList. Great to have you here.
Thanks, Felix. Yep.
Yeah, super excited. So we'd love to just hear a bit about, just what your journey was into crypto and what you guys focus on at AngelList in terms of tokenizing private markets.
Yep. Let me start with my own journey into crypto, and then I'll come to AngelList as well. First, super excited to see you all. My journey started with Coinbase in 2017, where I spent close to 8 years at this point before moving to AngelList. And if somebody had told me at 2017 that there will be a day where we would be discussing tokenization like the way we are doing today in the next 10 years, I would have laughed at you. Actually, most people would have laughed at you. Right? So it is true, it is true that gradually then suddenly is actually happening. We see it happening in tokenization. And this is where I think AngelList can play a very important role. Just to give a little bit of context on the business of AngelList, most of us, maybe most people might have heard of it, might not. Maybe you heard of it in the context of a job platform, or maybe your friend raised money on AngelList, maybe you raised money on AngelList. The platform went through, it was largely started by Naval, and it went through a complete transformation in 2019. Today, we manage about $125 billion in assets, close to 30,000 funds, 90,000 LPs, and about 26 to 28,000 startups. If you think of a triangle where each corner, one corner is a GP, other corner is LP, and the third corner is founder, AngelList is smack in the middle. And the primary focus is on sort of like accelerating innovation, accelerating the GP investments into the startups. Right? Now, the other part of your question, what makes this moment unique, right? I was actually listening to the previous panel where the panelists were talking about equity investments, like the state of like investment in crypto more broadly. We also happen to share just a quick story here. Our neighbor is Johnny Ive, who just sold a startup to OpenAI. I mean, our office neighbor, not my neighbor. But the thing that's very fascinating is some of the biggest companies you think of today are all choosing to stay private. I'm talking the OpenAIs of the world, the Anthropics, like the Stripes, obviously, right? And that's a big shift. Like, even 5-6 years ago, if you're hitting like a $5 to $6 billion valuation, the path is for you to go public, right? And that's a huge shift. What that means is that for most of the LPs, the capital is locked in much longer, right? Yes, on paper, your value is going up, but it has no liquidity to it, right? And that's a trend that we are seeing accelerate more and more as more companies choose to go private. That's one. Second is interest in private markets is at an all-time high, right? If you talk to and this is where the previous panel was talking about, is most people want exposure to early stage venture. That interest has just in the last 2 years has tripled, and it's an all-time high. Like there's some of the hottest deals. People are literally like, take my money, right? I don't care about the valuation, right? And it is real. I mean, that it's largely fueled by AI, fueled by crypto. The interest is an all-time high, which is the second key thing that's happening. And the third, which is something I've lived for many, many years at Coinbase and now at AngelList, is the regulatory stance has taken a complete 180 degree just in the last 6 to 8 months. We are now in a place where we can meaningfully engage with regulators. They are more open to new ideas. I mean, the stablecoin bill that just passed is a good indication. And we actually have people on SEC who understand crypto in a big way, right? And even in Congress, Mr. Hill French Hill has been a strong proponent, Hester Pierce, right? So a combination of these three, which is companies wanting to stay private, interest in early stage venture is an all-time high, and the regulation is probably the most friendly it has ever been towards crypto that makes tokenization so unique. Yeah.
Yeah, it's such a fascinating situation to be in. You recognized it accurately, which is that it feels like there's just so much money going into private equity these days, and now private credit is also all the rage. And it's such an interesting situation because it all goes in there. And the way I look at private investments like that is through the notion of an illiquidity premium, is that you get paid a premium for the illiquidity because it's not mark to market. You don't have the liquidity that you mentioned. So it's an interesting situation where we are, to your point, there's been less and less companies going public these days. So they stay there. There's that liquidity premium associated with it. But now we're going into this realm where we're seeing an increase of liquidity for illiquid assets in a way, which is really interesting. And then now we're talking about bringing that forth into something that is very liquid, which is crypto. So my question for you is, what are the benefits to actually tokenizing private markets? Are you still able to capture that illiquidity premium associated with it? And what are some of the pros and cons and ways to think about that?
Yeah, great question. So just to put some numbers in context here, right? When we talk about illiquid private markets, the entire volume of it is something like 150 billion. Compared to 14 trillion that is traded in public markets on a yearly basis, right? So we are really talking less than 1%, right? I think the premium is there in terms of entering the market, which is what is the price you pay to actually get a specific, stake in an early stage venture. Like, let's take early stage venture as an example, right? You're paying a premium for access, right? Once you get access, the market determines largely the price, right? So which is where I think crypto and on-chain could be super interesting, right? So one of the benefits of on-chain and decentralization is to make information symmetric, right? So there is no longer walled gardens. There is defined oracles that you could say that here are the things that can be sources of data. And it solves two purposes. One is it helps create symmetry in data, creating to a more liquid market. And B, from a regulatory stance, it actually makes it easier for an SEC and others to validate that, right? So in some ways, it's a feature, not a bug, right? But access is right, absolutely right. Access still comes at a premium.
That point about access, when you think about history, oftentimes, to be an angel investor, something in historical standards, you had to go through some hurdles to show that you were either an accredited investor, because the idea was that, these are high risk, high return opportunities. You look at the classic VC style approach, it's, shotgun approach, right? You allocate small accounts to a lot of different companies because some of them go to zero. So now it's an interesting situation. And I think, a lot of altcoins have really shown this, that when you evolve into a situation where suddenly venture style early stage companies get mark to market every single second, it's an interesting situation now where you actually see the mark to market in the chart. And so my question for you is, what is the right way to think about this responsibly? If you're somebody that is moving from, you're used to just, investing in indexes or the Mag 7, those established tech companies that will probably be still around in 10 years. When you move into something like this, what's the right way to think about that responsibly?
Yep. This is such a good question, because one of the challenges with early stage venture is there is massive survivorship bias, right? Because it's easy to look at somebody in the street next to me started and their company got acquired for 3.1 billion, right? And then people look at it and then be like, oh, shoot, I should be in that deal, right? But also there's for every exit like that, there are actually a number of things that either didn't make it or probably have stuck in the same market, or even worse, where you entered at a point where it's substantially higher and later on it decreased, right? So maybe zooming out, the question is, what is a reasonable share of your wallet that we can think about going into early stage venture, right? And for what it's worth, crypto had this exact question in 2017 and 2018, right? One of the questions we struggled at Coinbase was, when we think about, I don't know if many people know this, but for a very long time, Coinbase was very hesitant to list a lot of coins. I think even in 2018, I think there was maybe just 4, right? There's Bitcoin, LTC. I don't know if you guys remember that, ETC and ETH. And part of the challenge for us was definitely making sure that there is good there's good governance structure, but more importantly, we didn't have a strong opinion yet as to what is the share of wallet that we are aiming to go for, right? So depending on where you are in your own like investing journey, that could go anywhere from 2 to 5%. But 2% is probably, even if you were to capture 2% of your wallet, it is still substantial. Yeah.
I want to ask a similar question to that, but shifting more to the professionals. So the existing, GPs of funds, as they start to evaluate, if they were already investing in, private equity already in existing companies, and they start to look at that through the lens of tokenized private markets, what's the right way for those professionals to think about this as your company starts to bring forth more tokenized private companies?
Yeah. Yeah. I think of it as a 6-layered cake, and I'll walk through each of the layer. And this is important for you all too, right? Because if I was starting a company, I would literally look at each of these layers and then go, okay, what is the opportunity size in this particular layer? And then go after that. And then I'll connect that back to the GP, right? The first layer is obviously the GP stakes or the LP stakes, meaning you actually have an asset that you can tokenize. For AngelList, we have about, like I said, 28,000 of those on the platform. The second is the actual token issuance, right? Like securitize, fire blocks, like there is a broad, and how do you tie it to the existing contracts that we have on the platform? For example, when you are making an investment, there is an LPA contract, or when a GP is structuring a specific deal or a cap table, right? How do you bring all of those on chain, and how do you tie it to token issuance is the second layer. The third layer is the identity and KYC, right? Keep in mind that these are still largely regulated markets. So it's not free for all yet. And this is where the identity and in baking that identity into the smart contract becomes quite important. The identity layer becomes the third. And the fourth is the custodian layer, is that, okay, I got the stake, I was able to tokenize it now. Now I was able to create a gate where people can come in and through KYC AML. So how do I custody this really? Like, Coinbase Wallet is an example. There are a number of other options. That's the fourth layer. And the fifth is actual fund administration. And this is the piece that AngelList is uniquely good at, is how do you make sure that mark to market is happening, the tax implications are happening, the NAV is correctly being reset, and the LP stakes are all tracked in a investor management way. And finally, the fourth is the trading. Like, what are the venues you want to build for these stakes to be traded, right? Now, coming from a GP's perspective, what has changed over the last year and a half is every layer of this stack is seeing innovation along with the regulatory innovation that is happening. So what that effectively means is the problem space has moved from being a regulatory to one of engineering and go-to-market. And this is a big shift, right? Because this shift, by the way, exactly happened in AI 3 years ago, where reasoning effectively went from a PhD problem to an engineering problem, right? Today, people are not starting from scratch thinking, how do I build a reasoning model? They're basically assuming that a model exists out there and they're going to like build a wrapper around it and do a go-to-market motion. And a similar shift is happening in tokenization at every one of these layers. Now, from a GP's perspective, what they want to see is actually real innovation in these layers that gives them a lot of confidence that, and we've seen this with Apollo, by the way. Like, I was talking to Tarun, like, Gauntlet has done this with a part of like Apollo, where it gives them confidence to take a piece of their stake, tokenize it, and then see it trade.
Yeah, totally. Apollo's been, very much innovative on that aspect. Is there certain industries or sectors that are better suited for this idea of tokenization? Because I think about, for example, real estate, right? Like, we already have REITs that exist, which is a form to get exposure to something that is illiquid. So I'm curious if you've seen certain sectors or industries like that are better well suited for this new form factor.
Yeah, it's a great question. I was actually, prior to this, we had a call with Balaji where we were discussing this exact point, right? What is your sort of like your ideal proof point here, right? I think there is, I'll tell you a failure mode here, and then I'll talk about like how that feeds into, right? Tokenization is not a cure for all. Or in other words, it is not a way to sell, for lack of a better word, like, if there is no value, tokenization is not going to create value, right? It is not a solution in search of a problem, right? It is in service of better liquidity for something that's obviously like not obviously, but something that's valuable. Or in other words, just because you slap tokenization on a pig, it doesn't make it more valuable, right? So an ideal use case for this would be a fund or like a fund manager who is crypto first and who is crypto native and who can understand the value that tokenization can bring in from a decentralization and KYC AML process, and then take it on chain, right? That way they can actually see that vision come through and then create that secondary and liquid marketplace.
All right. So last question here as we wrap up is, I'm just curious on your 5-year time frame horizon for where you see this industry headed. Obviously, we've already talked about the trend of a lot of these existing privates like Apollo are now coming on chain and providing their own innovations. So yeah, where do you see this industry headed? Is it just going to entirely end up on chain and we just have liquid, illiquid private companies in that way? Or how do you see that?
Yeah, I have a specific perspective of how this world could evolve, right? If you were to squint hard and then be like, okay, if I were to take a leap of faith, there is a world where AngelList, private companies, and Coinbase could basically replace NASDAQ, right? They could become the default. And again, by the way, it just doesn't need to be Coinbase. Like it could be any of the exchanges, or whether it's Uniswap or any of the DEXs, where from the time you decide that, oh, this is the time I want to go out there and build something, right, to the time it creates liquidity for your company, that entire stack is decentralized, right? And the entire stack is like, on chain, right? And where we are is so unique because, like I said, it's a combination of this is increasingly becoming a huge market. Regulators are more and more open to it. And the tooling is coming together very, very well. And if you take a snapshot of that 2 years ago, you will find issues with each of these pillars. My hope is that 5 years from now, it becomes so second nature that it is not an afterthought to even do private market liquidity.
Yeah, well said. All right, that's all the time we got. Absolute pleasure to have you here. Enjoyed that a lot.
Thank you.